Is the webinar chat working all right, guys? Because Matt warned me from this is like slightly different Zoom software. He warned me that I had to authorize. You used to be able to. Yeah, no, that's perfect. We'll give it another couple of minutes just for everyone to get in, and then we'll crack on. Yeah, feeling slightly better than last week, Charlie. I think I was a bit burnt out with Matt being away for a few weeks. My workload sort of increased a bit. I think I was just burnt out last Wednesday. But I had a pretty chill weekend, so feeling much better now. Um, Conditions. I think once it broke out of that range at the end of last week, there was some nice opportunities. There was a beautiful M5 entry that I took on Friday morning. I know there was an M1 entry as well. Then yeah, GU's been pretty clean as well, I think. So yeah, market conditions have been good. It's just I'll go into a good bit of detail on the daily and EU just to really like try and hammer it home for myself as much as anything else. When the daily sort of the intentions aren't clear, it's usually a good idea to just sit in your hands and wait for it to break out in a lot of cases. It's in webinar chat, Simon. Maybe let me see who can see your messages. Everyone should be able to see them. Well, that's just my messages. Let me see here. Stop sharing. Panelists can chat with everyone. Attendees can chat with everyone. Yeah, I'm not sure if you can't see them. I'm not sure why, to be honest. Everything is set to it should be open. Right, so start with the EU on the daily. So obviously, whenever I was doing sort of daily recaps, whenever Matt was away, it was like beating a dead horse, where price pulled back into the demand, which caused the break structure, pushed up into the daily supply, swept liquidity. So we knew that it was possible we were going to see a pullback from there. Then we pulled back into demand here. Again, not the strongest demand, as it only caused price to wick to high, but still valid demand nonetheless. And you can see then price having mitigated demand, tried to push up, but failed to close above this high and failed to close above this high. So that's your quintessential sort of battle between supply and demand. At this point, it wasn't clear which way it was going to go. We knew demand could hold, and we could push higher, or we knew that this daily supply in the sweep could be the catalyst for the pullback. But then eventually it was last Thursday, we got the bearish daily chalk. So that's your demand failure. You have your like daily flip there as well. So at that point, it's very likely that we're going to see the pullback to at least the EQ of the leg, which we're approaching now. However, if you look left, you can see we have all this demand, which has already been mitigated. And then if you were to look for like the sort of the nearest unmitigated demand, it would be perhaps those wicks, or you could just take the extreme, depending on whether you take wicks, although it is slightly mitigated already. So yeah, the key lesson is when you're trying to trade the lower time frames, whether it be M15, M5, M1, whatever, it's like when price is sort of range bound here on the 4-hour or on the daily, sorry, where price could go either way, supply and demand are battling for control. That's where it's far lower probability to be trying to trade in the lower time frames. And then as soon as we get the chalk, then you can see we got some pretty nice sort of impulsive price action, pull back into the daily wicks, and then continue lower today. So beautiful price action. Again, you're in the premium of the daily leg. So you're selling at good value to target at least the EQ while knowing we can come down here. So yeah, sells for sort of the last week or so have been pretty high probability. And then again, just the key lesson is, which is something I try to constantly ram home myself, is just whenever prices sort of battling between supply and demand, just be more conservative on the lower time frames. So, would you call that a double sweep of liquidity? No, personally I wouldn't, because the liquidity behind that high was already swept, and then price didn't take out that high with this wick. So no, it's just one sweep of liquidity in my eyes. Now back to Monday, just to remind us where we're sitting coming into London. So again, there were some nice buy opportunities across the dollar pairs on Monday morning, and again you can see very clean framework. Had the 4-hour break structure, which coincided with the daily chalk. You can see nice impulsive price action. So yeah, 4 hours bearish, we've had the daily bearish chalk. So yeah, sells are high probability in the 4 hour. Now coming into London on Monday, we have mitigated this demand. Now 4 hours bearish, so we're only expecting this to be a reaction point for price to pull back into supply and then probably continue the bearish trend lower. Now we may have pulled back into this supply, or we may have even come the whole way back up here. Obviously we don't know, but having mitigated this POI, and see it's very clear demand. It's at like the extreme of this range caused that break structure. So buys are high probability, following sell off, following the break structure in anticipation of price sort of coming back up to at least that daily supply. Now drop down to the M15 just to see how things are setting up. I know Matt took the risk entry here. So yeah, so you can see, as we always say, usually whenever you're going to see a complex pullback, it's precipitated by sweep liquidity. You can see we had a strong liquidation here where basically caused the chalk there and then swept that low. And then we had the bullish IBOS there. So decent chance we're going to see the pullback. Obviously, this is the most recent M15 break structure. So obviously makes sense to pay the pullback to the premium. Yeah, this range as well is completely unmitigated. So high probability the price is going to come to there. Obviously at this sort of supply here, which I believe is buying at the EQ, that you have to be aware of. But whenever there's something like that's the supply which caused the break of structure, and you can see the range is completely unmitigated. And whenever you have, like, if price had pulled back in and mitigated even just the range, then I would say there's a decent chance that all the orders have been filled. But when the range is completely unmitigated, there's always a good chance the price is going to come back up there. So this is at 5:45, so we play it on. So obviously 4-hour demand mitigation, 2 bullish M15 IBOSses, in the discount of the leg. Yeah, buys are high probability. I know Matt took this risk entry. I took an entry in GU instead of it. But that was the risk entry there. Again, not the actual risk entry in and of itself isn't the highest probability. Like, it didn't sweep liquidity. There's no massively clear inducement in front of it. But again, you're just playing the overall story that, if you follow the mitigations, we had the first IBOS, and then we pulled back into the range and continued higher. So it's fairly safe to say that that range is mitigated at that point. So price shouldn't have to come lower. It could come lower, but it shouldn't have to. So if you follow the mitigations, then you can see we pushed up, we pulled back in. So that extreme was mitigated. We then pushed up again, had another like IBOS in it, but then wicked back into it. So the obvious place to enter was that demand, which is where Mr. Demand, which caused the break structure. Again, it had slightly been mitigated, but on the M10, there was a very clear unmitigated candle there. So you could have refined it that way if you wanted, but it doesn't really make that much difference. So just use a blue box for this just in case there was an M1 entry. So that's it. That was the risk entry that Matt took. I don't think there was anything massively clean on the M1. In this case, the chalk line is all the way up here, which is never really ideal. Don't think there was any M15 inducement. No, there was no M15 inducement, so you don't want to see a strong liquidation in the entry model. Fake chalk equal lows. If you play it on, yeah, price pretty much just ran away without giving the strong liquidation of the entry model. Again, that's the value of the risk entries as well. Just understanding when you're in a high probability area, yes, your risk to reward is less because you're using a bigger stop loss, but you're pretty much, if price mitigates its own, you're pretty much guaranteed to get tagged. Whereas, you know, if you wait for the M1 confirmation, yes, your risk to reward is better, but you know, you're running the risk that you're not going to get tagged. And when price is in sort of a very high probability framework such as this, then that's the trade-off. It's up to you how you want to approach it. Head on. We've mitigated this range. Valid look for entry here, very big POI, did sweep liquidity there, so it was valid, it was at the premium. Yeah, put it on. So see if something on the M1. You could say there was a sweep of equal highs there. Probably visible in the M5 as well. Yeah, you can see there's equals there. So there was a sweep of equal highs, and then I think price just absolutely tanked, if memory serves. Yeah, so yeah, there would have been no tag in the extreme on it if you're entering on the M1, which would have been the obvious place to enter. And you can see we just swept that low and then went. But yeah, again, valid entry, valid POI, but yeah, you want to see the strong liquidation, and then yeah. So quite annoyingly for Matt, price just sold off. At this point, you're sort of thinking the pullback could be complete when you see that bearish momentum. But basically just we swept this low and then immediately started a retrace. So again, it's pretty much just a liquidation. I know a lot of people viewed this as an M15 IBOS, and this is a handy little tip that some of you might want to look at yourself, because it's a valid M15 pullback. And whenever I started looking into the M15 risk entries, this is where I noticed I got caught out a lot. In this scenario, I would have been saying, you know, we've mitigated supply. I think we've mitigated the EQ as well. So let me double check that. I haven't quite mitigated the EQ, so it is slightly more aggressive to say that the pullback's complete at this point because we hadn't mitigated the EQ. So I know there's people looking for sales from here, which again is valid. If you take that as an M15 IBOS, it's definitely valid. But what I personally did was filter it on the 1 hour. And as you can see on the 1 hour, there was no basically pullback. It was just a straight push up. So there's no bearish 1 hour chalk. And the price basically pulled back into this 1 hour range. And then pushed higher. So that's where sort of using the 1 hour to filter the M15 ranges, particularly if you want to be aggressive with the risk entries, can save you from a lot of losses. Because again, it's valid to have said that, to have that had that as a bearish IBOS, but just when you see the range isn't visible at all on the 1 hour, it's a massive warning sign. So personally, the way I was doing it, I was ignoring this pullback and was expecting this high to get run. Yeah, so that's personally why I was approaching it, and that's where I've found the 1 hour can be very beneficial in keeping you out of trouble. Yeah, it's coming in New York. See, we initially swept this high, and I believe there was news at 1:30, which is what that big candle is. So again, you could have potentially looked for an M1 risk entry following the sweep, but you have to be wary of the M15 PBL, because again, it's an M15 high that got swept, so you want to be wary of trading against the M15 PBL. And if you think there was a couple of entry models there. Those this swept this sort of internal high, pretty minor high, and mitigated sort of the M1 extreme, and then you can see we had the PBL fail. PBL failed chalk V shape, flipped in sweep, so enter an extreme, may get away with a break even there, depending on how you trail to, depending on how you manage. And then there was another potential entry here where price swept the more major M15 internal high. You can see again, had the M1 PBL fail, which is small yellow box, V-shaped chalk, but then the warning sign was that the large yellow box, this box here, was the M15 PBL, and it was holding. So it was coming up to news as well. So it was always likely the price is going to do something like this here. But again, a couple of potential entries there, depending on how aggressive you want to be. Not something I would really personally take, to be honest. But again, we all trade our own way. So I think this was the M15 shock, the way this candle formed. Took the high and then took the low. So at this point, generally, it's 1:30. Generally, I'm just happy enough to leave this sort of price action alone. We've had a bearish shock, so there is, valid supply, then you could take that wick. So it is valid to look for an entry. But as we'll see, price just sort of started to range around quite messily. And yeah, it was valid to look for an entry, but it just wasn't the cleanest price action. I'm not sure if I think I noted in the markup that I was just happy enough to leave that alone. You can see price just ranging sort of sideways, not really going on here. So yeah, I would be happy enough to leave that alone. Yeah, wouldn't have. I think I saw somebody took a risk entry in that candle there. They've tagged in sort of during news. Is that the EQ, swept liquidity, and there's no inducement. It's not really somewhere I believe in a risk entry, particularly coming in the news, but it makes sense relative to the structure at that point. So that was Monday. Jump back out to the 4 hour now to see how we're sitting coming into Tuesday. So we're playing the pullback from this demand. You can see pushed up nicely, hadn't quite mitigated this range yet, which obviously that's sort of the bare minimum. You're expecting that if price, yes, it could come up here, but we know the first likely reaction point where, yes, there's these wicks, which you can see were sufficient to cause this sort of minor reaction. But again, when you have a full range like that there, that's completely unmitigated, it's very likely the price is going to want to come up and mitigate it. So yeah, so favored probably buys coming into session on Monday just to play the pullback up this range. While obviously understanding sort of we're bearish overall, swinging and turns both bearish, this is only likely to be a minor pullback that if we do get clear signs of bearish intent in the M15, then we'll be happy to look for sells as well. So take it back to pre-London. Had a bit of a spoiler alert, but some people were taking risk entries here, which again, it's logical if you ignore the wick. You could say that this was sort of the internal high, and that if you drag it across, price closed above, so internal is bullish. But just personally, particularly if I'm looking to take a risk entry, price is pretty much ranging between that wick and this low. This wick or this high is weak as it failed to take out this low, and then this low is weak as it failed to take out this high. So your weak structure on both sides of the market, not somewhere I would really load. It's logical to take it. You can even see like ranges are starting to be respected there. That small internal structure basically, but just sort of have to understand that there's weak structure on both sides of the market. We had this M15 demand at the extreme, which it was sort of keeping an eye on for perhaps a confirmation entry, just on account of it having the inducement in front of it. With price ranging like this here, there's a lot of liquidity built there. So it was always likely price is going to come in here and then perhaps continue higher. But if you play it on, see, we just swept that low, didn't quite mitigate the POI, and then rocketed to the upside. So at this point, there was a valid M15 confirmation entry. Let's see, you have the liquidation. Bearing in mind as pro internal trend, we know the price can likely come up to mitigate at least this 4-hour range up here. So buys are decent value. That's our M15 PBL. So you can see you had the liquidation this low, PBL fail, chalk. So it was valid tender in the extreme there. But I believe it was a no tag, and then price never pulled back to the demand at the extreme for a confirmation entry. So it's one of them where you just have to sort of sit and watch price play out without you, unfortunately, unless you're getting into M1 continuations and all that jazz, which is not something I really recommend. So had another IBOS. At this point, buys are getting even more aggressive because we've now mitigated the premium. So you can see that's the premium in the range. So, you know, when you're playing the counter trend pullback, it's more aggressive. So you want to be sort of ideally getting in at the start of it in like the bottom 25% of the range. Once it mitigates EQ, it's valid to keep buying, but you just have to understand that sort of it's lower probability, because once price is mitigated the EQ, it's likely that the pullback is complete. Now, yes, we had this range up here that we know price is going to come towards, but yeah, it depends how aggressive you want to be. As with most things in trading, it depends. And yeah, so that was just at the end of London. We pushed up and we mitigated the 4-hour supply. So now buys are pretty much out of the question for me. It's highly probable that this pullback is complete. You can see it just looks like an impulse down and a corrective pullback in a supply with liquidity printed that we're likely to smash and fuel the next leg to the downside. So at this point, my attention's basically switching to sales, that I want to get sales. Now, had this M1 or M15, sorry, supply here, no inducement, didn't sweep liquidity, but would have looked for a confirmation entry from there. But if you play it on, you can see we pull back into this demand. So this demand could easily have held and we could have pushed up. And then obviously if it fails, you then have your demand to supply flip and you have a bearish M15 shock. So at that point, sells are higher probability, which is obviously what we're most interested in now, because we understand the pullback's likely complete and we want to target these equal lows. Sort of ranged around here a bit coming into New York, swept the high as well. So we have the flip that swept. We have the bearish chalk. So ideally here, you would want to see price just pull back into that supply and then get in sales. Again, could look for buys from here or even that inside bar. But yeah, as I said, I personally wasn't interested in buys at this point because of the 4-hour supply mitigation. So we play it on, see, sold off. Wouldn't be interested in risk entry here, particularly coming in news. Yes, it's protected internal low, yes, swept liquidity, but just the 4-hour mitigation sort of takes precedent for me. So yeah, unfortunately, it was sold off. Got the bearish eyeball, so now swinging and turner aligned. Now sales are even higher probability. You know, there were decent value here following the chalk and flip, but now that swinging and turner aligned, they're even higher probability. But unfortunately, we didn't quite mitigate the supply that I wanted to trade from. And yeah, that was pretty much the end of the session. And yeah, pushed down a bit lower. But I'll now go through today's price action. So put it on. So yeah, on the 4-hour, obviously, as we said all week, on Monday when we were sitting down here, we said basically we want to play the pullback into this range and then potentially flip our bias and look for sells. And you can see the whole hypothesis basically played out perfectly. We've now got another bearish high boss. So yeah, swept this low. So we may have seen a bit of a pullback following this, perhaps into that 4-hour supply, but wasn't completely ruling out sells because the clear demand was down here, which you know, usually there's going to be a demand mitigation to be the catalyst for a pullback. So didn't completely rule out sells because is where we could sell off down to here before then we get the pullback perhaps into here before continuing lower. Also have to be mindful of the fact that, you know, our 4-hour swing range is here. You know, I'm viewing these as just internal pullbacks. Even this one here. So it's not beyond the realms possibility that the internal could switch bullish to facilitate the 4-hour swing pullback, which would obviously be very nice for buys in the M15. So yeah, unfortunately, price sort of sold off without us just before session. Just let me take this back a bit now. It drops to M15. So this is why we recommend session hours, particularly when you're trading on the M1 or something, because you can see that was 3 o'clock yesterday, and then pretty much up until 6 o'clock this morning, price just pretty much moved sideways. So you're better off just waiting for the session times, particularly if you're trading like the M1. Had this M15 supply here that I was aware price may want to come up and mitigate before continuing lower, but with a pretty clear sweep of liquidity here. So that's generally a pretty good sign the price is going to sell off. Swinging internal aligned at this point, so massively favor sells, and then just play it on. Yeah, got the next bearish high boss just at the start of the London session. So at this point, you're looking for sells. Ideally, obviously, wanted to get involved at the extreme. You can see it had the lid as well. What ended up playing out was this little POI here, which, well, it wasn't the best POI in the world. Didn't sweep, didn't have lid, but it's logical. Again, it had a lower time frame lid, like you can see. So sometimes, if this POI was setting up the extreme, then I would probably count that pullback as lid, because it's clearly lid on a lower time frame, because you can see the wick, the pullback, but on the M15 it's not. And on account of this being a pretty low probability POI, I wanted to wait for the extreme, then I wouldn't really be in that much of a hurry to start looking for lower time frame lid from this POI. But so we dropped the M1. This would be your lid that isn't lid. It's essentially M5, M1 lid. But again, it depends how aggressive you want to be with it. And we also have the fake chalk here, which again, it's one of them. Yes, it's there. If you want to keep it completely mechanical, you can, but it's not. You would rather see a slightly more significant low get taken out. You know, you want to see slightly more significant structure get broken. As again, with liquidity, what you're essentially trying to do with fake liquidations, etc., you are trying to get people caught on the wrong side of the market. And, you know, the more significant sort of pullback that gets swept, then the more likely there is to be a lot of liquidity behind that high. That's a pretty minor chalk, but it is there, and you can see we pretty much just pulled back to mitigate that. Long mitigated M1 demand before pushing higher, but again, load it's valid. And then M1 chalk, and it's a tricky one here. The obvious place, if I was looking to enter here in the M1, I probably would have entered here, because it's a pretty clear sweep. So you can see that would have been a loss. And the extreme did play out. But yeah, personally, I would have taken the loss in the flip there, where I looking to trade the M1 just on account of it having swept. It's pretty clear cut entry in my opinion. And yeah, the extreme played out very nicely, but don't think there was an M5 entry either. No, there was no M5 chalk, which is a shame because again the M5 it cuts out so much noise from the M1 because they're when you have multiple entry POIs like you have here, you know, you could have entered there, you could have entered there. You know, what do you do? It's a tricky one. You know, do you want to just place the entry on both of them and accept that, you know, one or both of them may be a loss? Or do you want to just wait for the extreme and accept the flip may play out? They're sort of things that I can't give you an answer for. Every trader is different how they want to approach it. Yeah, and personally, they're not decisions I particularly like making, which is part of the reason why I've moved up the timeframes, because generally the entry is usually pretty clear cut. There's not multiple POIs to choose from. So that was this morning on the M1. And then yeah, kept selling off, another IBOS, and got the swing break as well. So you can see how powerful the internal structure concepts are, that, you know, switch bullish here, internally making higher highs and higher lows. And then we know once that sort of strong low gets taken out, it's very likely this low is going to happen or is going to get run. And then you can see we had this corrective pullback this morning, and then that is what happened. So that is the power of the structure concepts. And then yeah, I just kept selling off, didn't, you know, follow in the break structure, could look for a sell from there, or we still had this extreme that was completely unmitigated. But yeah, price didn't pull back down and really just mitigated nothing and sold off. So that was London. There was the potential sell on the M1. So we played on to here. We're coming into London. We're coming into New York, sorry. Haven't quite mitigated the 4-hour demand yet, which is a pretty big detail because, as I said, it was always likely they were going to come down here, and then maybe that would be the catalyst of the pullback. So there was the potential for one more leg to the downside. And obviously, this wasn't the best POI in the world, didn't sweep liquidity, didn't have inducement, but it was possible that we'd mitigate this and continue lower because, again, if you just follow the ranges, that's not a POI I'd be setting a risk entry on. Yes, you're following M15 order flow, but all that really has going for it is that it is a range. It didn't sweep liquidity, it didn't have inducement. It's in the discount of the range. You know, it's following a break structure. We can expect a pullback, and then we also had this range above, which was completely unmitigated. So what do we know? When a range didn't sweep, it can be used as inducement for above. So it wouldn't have surprised me at all if you maybe swept that liquidity, came in there, and then continued lower. But if you play it on, let's see, we mitigated. Yeah, mitigated, played out quite nicely. Now we've mitigated the 4-hour demand. We've had another bearish IBOS, but sells are sort of getting a lower probability with each sort of internal break structure following the swing break structure. It's lower probability to keep following the order flow just because it's more likely that the pullback is going to commence at any point. So yeah, could look for a sell from here. Again, if you're just following the order flow, had this sort of flip as well, but it's in the discount. The extreme is unmitigated, didn't sweep. And if you play it on, drop down to that one in a second to see if there's any entries, but yeah, I'd say trading seems simple whenever this happens, where price just push down, respects, but unfortunately it's not always that easy. It's quite simple to get burned. But yeah, I'll check for any M1 entries. Don't think there's on that clean. We came in here. Don't think there was a strong liquidation there. There may have been a strong liquidation there if you want to look for it. But anyway, the PBL held. Then we pushed up, kept pushing up. So there's no strong liquidation. So if you wanted to see that in the entry model, there was no entry there. Yeah, again, coming in here. Wasn't the best POI. We've mitigated the 4-hour demand at this point, and it doesn't seem to be not clean an entry model on it. and all the chalk line was down here. So there's no opportunity to get up here. So more aggressive selling at that point, as I explained on the M15. But then again, you can see it is valid to just keep following the order flow until it fails. But you have to accept that there are going to be occasions where you just get burned, because if you keep following the order flow here, it's like once you mitigate this 4 hour demand as possible, price can just shoot to the upside. And the 4 hour pullback sort of commence. But yeah, it depends how aggressive you want to be following the order flow. So I'd say it was pretty clean price action this week, like with the internals being respected quite nicely. The swing trend is playing out. So it's been quite nice price action. I'll now do a quick AU recap. So AU, as I have been saying for the last 2 months more, when did this range start? 10th of March, and we're now at the 18th of May. So yeah, over 2 months, pretty much been just sweeping highs, sweeping lows, not really going anywhere. Overall, it's crystal clear. Swept the swing high. Swing is bearish, internal is bearish. We've double bottoms here. It's plain as day that the next big move on AU is going to be to the downside to smash these equal lows and continue the swing and internal trend. But it's just when it's going to do that, because you can see we've been in this consolidation phase for over 2 months now. We came down here, it looked as though we were going to run this low, but retraced then and ended up sweeping the high. Swept this high then, bearish chalk. So yeah, just the daily's been a mess. AU's been really tricky for the last few months. But overall, it's clear where it's going to go. It's just this time on those sort of moves on the sort of lower time frames is a challenge whenever there's so much indecision in the daily recently. Right, so take this back to Monday morning. So we had a 4 hour break structure, so 4 hours bullish. However, you can see as soon as we closed above, price immediately retraced with a decent amount of momentum. And we got a bearish IBOS, which is a sign that the swing pullback at least is beginning. But of course, in the daily, we're aware that this 4 hour break structure is a sweep of liquidity. So it's not beyond on the realms of possibility that low will get run. Yeah, it's just really tricky sort of price action. We'd swept this low. So main idea coming into Monday was, as with all the dollar pairs, was to play the sort of bullish. In this case, it could have been the continuation of the swing trend, or it could have been just the internal pullback, because this was the internal range. So it had this aggressive sell off. So anticipating a sort of pullback perhaps into this supply before continuing lower, while understanding that having mitigated the discount of the 4 hour range, it's possible that the 4 hour swing trend could continue. But again, we're sort of in and out traders. We don't really need to think too many steps ahead. So coming into the session on Monday, main idea was looking for buys. Drop 10-15 now. So this coming into London. Had this POI here. Obviously, didn't have inducement, didn't sweep, wasn't the best. But it's valid nonetheless. It's the only clear supply within this range, which caused the break structure. Again, I was mapping my swing structure quite tightly here. Doesn't really matter whether you map them a swing or internal. It's just that I found when we were sort of range bound in EU, I ended up with sort of quite messy structure where I had sort of a huge swing structure, and then I sort of had various layers of internal structure as well, which I just found led to me confusion, and sort of resolved after that, sort of map a bit tighter. So here we are. Again, it's valid to look for a sell within here. Internals bullish. So we know we had the sweep of liquidity on the 4 hour. So yeah, it was valid to look for buys as well. In terms of POIs, obviously this was the most recent range. The ideal one to get long from would have been the extreme down there. As you can see, it was completely unmitigated. We had this one here that I had just drawn on as the black box, as it was pretty terrible POI, didn't sweep, no inducement, 2 unmitigated POIs below. So that was sort of my thinking on that one. So at this point, could have considered buys. The extreme's obviously ideal, swapped a bit of liquidity there, completely unmitigated, inducement in front of it. And this here would have been the next best one. And then obviously the top one, I would have been expecting to get used as inducement. So just play it on. Pushed up into the zone. I don't think there was entry. Yeah, so that was a valid entry. Strong liquidation of the high that caused the chalk. V-shape recovery. You can see a lot of momentum up, a lot of momentum down. PBL failed, chalk. Had the PBL flip as well, didn't sweep. So obviously the extreme is the obvious place to answer or to enter. Sorry. And yeah, I think this was a pretty quick loss. So yeah, the main lesson there is sort of following the 4-hour sweep. It was likely we were going to see sort of a decent bullish pullback, at least up to this sort of little range here. So that's probably the main explanation for that loss. Again, it's a completely valid loss to take, but yeah, it's completely valid, but yeah, it's just a 4-hour liquidation. And right, back to M15. So at this point, still potentially interested in buys in the demand. Looks like we're going to pretty much blast through this supply, as we've had sort of a couple of failed reactions to it. And yeah, and swept that high initially. We can see where we feel it close above it, but just pulled straight back into the M15 PBL. So for that reason, if you're looking for a liquidity entry model on the M1, you'd have to be super careful of trading against that. As again, multi-time frame analysis, that's what it's there for, is to make sure you don't sort of get too zoomed in. And then again, we had the break structure, we had this man here. The tricky thing here is that, yes, the M15 is switch bullish, but we've also mitigated the 4-hour range. So it's not ideal to be buying at this point, but it's not the best. It's not the best range in the world. You know, it didn't sweep liquidity. It's quite poorly formed. It was logical to think that price might come to here or even here. So it's not, if you're going to buy through 4-hour supply, this is a sort of 4-hour supply you want to be looking to trade through. Pull back into this demand. So again, completely possible this could hold and keep pushing up. Were it to fail and we got a bearish chalk, then you could consider sort of taking the aggressive sell to play the M15 pullback. You can see just at the end of London, we got the bearish M15 chalk. So yeah, valid look for sells at this point, but just understand that M15 is bullish. You know, you're essentially just playing the pullback to target sort of demand at the in the discounted leg. In terms of supply, that would be the obvious supply within that range at the extreme. And then valid look for an entry, price mitigated. We had the news at 1:30, which again, that would have sort of put me off taking a trade so close to news. But then had the M15 strong liquidation. It's a strong liquidation because it caused that shock. So had strong liquidation of the high, and then yeah, now we've another chalk. So now I would favor sell even more. But it's quite messy price action. There's no real engulf candle there. You could just take the wick. Yeah, I'm not sure if there was on the M1. No. Yeah, there was this entry model set up just before news 12:30, or the entry would have been tied at 1 o'clock. So you had the strong liquidation of the high, which caused the bearish chalk. So had strong liquidation, PBL failed chalk, and then pulled back into the supply. And yeah, probably would have been a break even for news. And we got the M15 strong liquidation. Yeah, following the news price action is generally just quite messy. And as I said, the M15 wasn't the cleanest, so I was just happy enough to leave this low. And like, there was no massively clear engulf candle. Price sort of swept that low and looked as though it was going to retrace. Yeah, just not a massive fan of that price action. It's very rare I'll take a trade after news, to be honest, just because price action tends to be quite messy. But you can see in this case, we did push down, swept this low, and then pushed to the upside. And yeah, got another break structure. So yeah, that was Monday. Now jump back out to the 4-hour and go to Tuesday. So yeah, as I said, it wouldn't have been a massive surprise to see this range fail. There was no sweep liquidity. It wasn't the greatest, but you can see sort of took out the high there. And this was your 4-hour PBL, if you want to look at it that way. So it's possible that if price is going to continue higher, that was going to hold and keep going. You can see you had a minor sweep there, so that red line was actually a bearish chalk. And yeah, in terms of M15, happy to look for buys in sort of anticipation of price continuing higher from this 4-hour demand, while sort of understand that having swept this liquidity, it is possible we could come lower and run here, particularly after the sort of aggressive M1 chalk, or M4-hour chalk. Sorry, I'm losing track of my thoughts already. So yeah, this is coming into London. Obviously, M15 was bullish, break structure here, but then you can see had sweep liquidity. Again, usually whenever a trend's going to change, there's very clear sweep liquidity like that there. See, we had that sort of arc information, swept the high, and then the bearish momentum kicked in. And see the 4-hour demand there. So we mitigated the M15 demand at the extreme of the 4-hour demand, tried to push up. This supply held and pushed price lower. So M15 is bearish. So at this point, sells are pretty good value. Sort of bearing in mind that we'd had the sweep of the 4-hour and sweep in the M15 and the bearish M15 boss. So yeah, as I sort of explained the other day on Monday, in terms of these POIs, now we're only expecting these to be reaction points because the M15 is now bearish. We've had the failed reaction to the 4-hour PBL, but that POI was pretty low probability in my opinion. Just didn't sweep, no inducement, unmitigated POIs below. Not an area I personally would have been looking for an entry, particularly as a counter M15 trend. But as you can see, we've got a very strong reaction from it. And yeah, I don't really recommend trading counter M15 trend without at least an M15 shock. And in this case, we just had a sell off followed by a V-shaped recovery. So no bullish M15 shocks. So personally, I wouldn't be looking for any buys in here. As it was counter M15 trend. In terms of looking for obviously an M15 continuation as the M15 is bearish. Had this POI here, you can see it had no inducement, so it wasn't a massive surprise to see it get swept. And if you play it on, you can see we swept that POI, basically mitigated the extreme. And then this was obviously our PBL, M15 PBL. So ideally want to see it fail before looking for an entry. Just because again, you don't want to be trading against the M15 PBL, you know, even if you can get in. So if you can get in up here, it's very aggressive, but you want to be sort of at break even before price gets to here. It's entirely possible that can hold and price push higher. And then see we got the PBL fail and chalk here. And then now sells a higher probability. Obviously, it's tricky again because there's no massively clear engulfed candle. There's a lot of wicks, but then you can see we swept this inside bar and sold off. I think there was one very aggressive entry model during the London lull. It's not something I would really recommend taking, to be honest. You could have viewed those as equal highs. It's quite aggressive, M1 equal highs, so you could view that as your strong liquidation on the M1 if you wanted. You can see sort of liquidated here, pulled back into the PBL and pushed higher. Had the chalk, no real V shape. Yeah, it's way too aggressive an entry for me, but it was there if you wanted to look for it. And then sold off quite aggressively, I think, coming in news. Yeah, so it came down, almost took out the low, but didn't. Retraced with news, mitigated this sweep zone, and then pushed lower and gave us the break structure. Again, there was no entry within this POI on the M1. So got another break structure, and you can see pretty much just very minor reaction to these two demands. So that was pretty much Tuesday, and then go through today. So coming in a session this morning, swept this high, had a bearish chalk, had the 4-hour PBL fail. So coming in a session this morning, I knew there was a high probability this low was going to go. Wasn't really interested in buys, not demand at all, as the low was weak behind. So yeah, favorite sells potentially target this low, while being wary of the fact that we had this demand just below that low, which it's likely price could use that as inducement, and then that could be the catalyst for sort of a deeper 4-hour pullback, whether it's just within this range or potentially the continuation of the 4-hour trend. So was wary of sort of buying against either of the, or selling against either of those two demands down here. Yeah, so let's go jump to M15. This one was just before London. Yeah, so had another bearish break of structure, hadn't quite mitigated the 4-hour demand, so it wasn't completely ruling out a sell here. They were pro M15 trend. Likely the price is going to push down to mitigate the 4-hour demand, even though we had swept this sort of pretty significant low. But obviously that POI was pretty insignificant, didn't sweep, no inducement, wasn't really a clear flip. So wouldn't have been very keen on trading from there, would have ideally wanted the extreme. But you can see price basically pulled back. We mitigated the EQ of the range to the pip. No refined M15 POI within it, unfortunately, to look for an entry. But yeah, and sold off again. Now at this point, I suppose this is the opposite scenario to what played out in EU today, where sort of the bearish ranges just kept sustaining and price kept pushing down, because yes, you can't keep selling from here. M15 is bearish, but following the bearish 4-hour or following the 4-hour demand mitigation, you have to know that it's possible that the M15 may switch bullish. So it's more aggressive to keep selling from here. I don't think on setup on the M1. Yeah, there was potentially an entry. Wouldn't have been tagged on it. So no strong liquidation. Strong liquidation was essentially within the flip. I think it's liquidity entry model 5. You can see we got the reaction, swept liquidity within it, and then pushed down. So was a valid entry model, but as is so often the case with the AU, it wouldn't have been tagged on it. So yeah, we've had the reaction to this M15 supply. Possible this low could get run, but equally possible that the 4-hour demand will take precedence, and this high will be run. If you play it on, see, pushed up. Yeah. So yeah, you can see that's basically your flip, and then price pushed up and gave us the break structure. Now again, there's a tricky one because yes, it's technically an M15 break structure, but we have now mitigated this 4-hour demand, which is, you could, or a 4-hour supply. You could argue that the Wix is the PBL, but you could argue it's that whole range either. So it's not ideal to be trading against this PBL, as you can see it caused this liquidation. So not ideal to be buying against that, but having said that, the M15 switch bullish, so it is valid to do so. Obviously the only real POI within the range to look for an entry was here. In terms of the POIs, you could, in anticipation of the 4-hour supply holding, look for an M1 entry there, but again, when it's counter M15 trend, the safest bet is always to wait for an M15 shock. We play it on, pushed up, so mitigated this supply. At this point, it's where you have to sort of stay neutral, and you have to decide, do you want to sort of wait for the market to sort itself out? Do you want to wait for this sort of supply to fail and price to take out this high before looking for longs? Or are you happy just to basically play the market both ways, look for buys, look for sells, and let the market decide which way it wants to go, and you capitalize either way? And personally, buying against the 4-hour supply and the mitigation of the M15 supply at the extreme, it's a bit too aggressive for my blood. But again, it's valid to do so. Obviously, at this little range here, didn't sweep liquidity, so it was always likely to be swept. And then obviously, I still had the flip, which probably would have been the preferable area to look for an entry. I don't think there was an M1 entry from. No, it's quite messy price action. Nothing must be clear there. Again, in terms of looking for a liquidity entry model there, it's very significant. It's a very insignificant low. There's unlikely to be that much liquidity behind it. You know, we've mitigated the supply at the extreme of the 4-hour supply. So if price is to continue higher, I would expect that sort of range to hold and price push up higher. So the fact that range failed, that would sort of have told me the price is more likely to head lower in line with the 4-hour supply. So I'm personally wouldn't be looking for a liquidity entry model there. And yeah, at this point, don't see how it went. Yeah, basically just pushed further up into the supply, and now you've pushed down. Yeah, not sure if there was an M1 entry model there. No, it's like AU, like on the M1, to be honest, is just a waste of time because it just doesn't give the entry models really. You can see you had strong liquidation, had the fake chalk there, liquidated the high chalk, but then it didn't come back to anything anywhere near the extreme, and then just sort of sold off. So yeah, will be interesting to see which way this goes. I'd say at this point it's very likely this low is going to get run in the M15 with switch bearish again, just because it looks like the 4-hour supply is going to hold. So that's EU and AU for this week. Hopefully I sort of explained my thought process there pretty clearly, and hopefully it took some value from it. The 1-hour is very handy for sort of filtering M15 ranges. If you're looking at like an M15 range and it's not like if it's not a visible pullback in the M1, then it has a far higher probability of failing. Isn't that an M15 liquidity entry model 1? Yeah, you could look at it that way. Liquidated the high that caused the chalk, and yeah, bearish chalk. Yeah, you could have looked for an M15 entry model there. If you trade AU. Does anyone have any other questions running, or will we wrap it up there? All right, guys, we'll call it a day there. Hopefully it's took some value from that. Thanks very much for your time. And sure, if you have any questions on, just post it in the questions channel in Discord, and I will get back to you. Thanks, guys. Goodbye. Have a good one.